Hello and welcome to this week's financial update. Hope you're all safe and well. Apologies if the lighting's a little bit dark today. We've had a few days of terrible weather, so we're not getting a lot of natural light in today. But anyway, the global stock markets had a bit of a wobble at the end of last week, with the FTSE 100 down nearly 4%. This leading to some to think we're in for a period of prolonged losses as we enter the final phase of the bear market. This all came about because of an update from the US Federal Reserve, where they painted a pretty uncertain picture of the US economy. They were basically saying it's too early to tell what type of recovery we're going to see, and that they're not going to raise interest rates until at least 2022. It was also reported that there's been a spike in new coronavirus cases in China and the US, so the markets will be watching this data closely over the coming days. However, having said all that, it wasn't long before the stock market went back into recovery mode, and we've certainly seen some positive returns over the last few days. But all of the recent stock market recovery should be treated with some caution. Bank of America ran a regular survey where they asked 250 investment professional fund managers who manage over $600 billion in assets what they think of current state of play. And the consensus was generally that stock markets around the world are overvalued. But this doesn't necessarily mean that they're due for a fall anytime soon. There's a famous quote from an economist, John Maynard Keynes, that says, "The market can stay irrational longer than you can stay solvent." So it basically means it's incredibly hard to time these things, and much better to stay invested over the long term and ride the waves. In the UK, we heard that the economy shrank over 20% during April, the biggest contraction on record. But of course, this is to be expected if you put the economy into a self-induced coma. And you could look at this another way and say that even though we were all locked down, we were still able to produce 80% of our normal economy. So to me, that's quite impressive. The UK inflation rate is down to 0.5%, which will help families that have been struggling if they've taken an income hit, as it means that the costs of goods and services aren't rising as fast as previously. Also, the Office for National Statistics released data that says the average UK household has been able to save £355 per week during lockdown. So there's plenty of spare cash out there to go and spend in the retail shops as they now will start to open. Over in China, the country where the global pandemic started and the country most advanced in terms of ending its lockdown, it was interesting to see that driving congestion and housing activity is all back up at levels that were previously there before COVID. In Europe, France and Germany have now opened their borders to the EU and the UK, and Spain will shortly follow. This will interest British holidaymakers, and the government are currently reviewing their quarantine plan and looking at potentially having air bridges, which would mean you wouldn't have to quarantine for 14 days after coming back from certain countries where the coronavirus case count is low. But the best news of the week was a breakthrough in treatment of COVID-19. Oxford University have discovered that a widely available £5 steroid drug can cut COVID-19 deaths by a third. So that's something that's really pleasing. So that's it for this week. Hope you found it useful. As always, please subscribe to the YouTube channel, RTS TV. Also leave comments and questions, and we'll get back to you straight away. Until next time, take care, stay safe, speak soon.